everyone's worried about an AI bubble ever since Nvidia just blasted off, and who's sitting around going, "I wish I had semiconductor chips." Like no one was even thinking about that.
How could that be a bubble? Isn't a bubble fake?
No, it's inflated.
Yeah, but Nvidia's selling these things. They're selling it like gangbusters. If I go to a hot dog stand and they're just shipping out these hot dogs, nobody says it's a hot dog bubble. People are buying
No,
hot dogs and eating the
they don't
bubble.
think Nvidia is the
Eating the hot
bubble.
dogs. Hmm.
They think that's a symptom. That's the hardware symptom of, because there's a bunch of investment, or at least there's talk of a bunch of investments within the AI space. So just like in the dot-com era, you can have a company that started yesterday, two guys in their basement with a paper that they went public with a dot-com name. People go, I don't know if this is going to be the dot-com that takes off, because this took off and that took off and this took off and that took off. I don't want to miss out legitimate ones, right? Especially if you are working, this is not your money. You're working for a family office, you're working for a prop firm, whatever it is, a broker, and your job is to pick the winners. And you sit there and you go, I made 17% this year, great pick. And then the guy at the next building, he made 300% because he bought some .com thing. And you go, well, that's nice, we're gonna have to let you go. He's like, but I chose the safe things. Like, no one cares about that. Like, well, then I gotta buy I can't risk not buying the buying into the .coms in case one of them takes off. So those people, they would do that. Two guys in their basement issued a thing. They're public, and you don't know them from Adam, and all of a sudden they're worth $150 million.
But was that happening in AI?
Well, yes, because all these people were building. So ChatGPT comes out, the AI comes out, and all of a sudden people are like, whoa. People will just give all their information to. I thought we were already getting all their information. We have cameras on them all the time. We're listening to them constantly. We see what they're doing. They're posting constantly. But that's them willingly posting things that they want other people to see. They'll tell AI anything, everything, because the more they tell it, the more the AI could recommend things to them. This is unbelievable.
That's great.
And the pitch on the tin is there's not a person behind here listening to all your personal details. You sick person. It's not a person back here. Granted, a lot of people are behind looking at a lot of information, but they don't know about you specifically. It's an aggregate. We don't care about any particular dinosaur that died. We care about the oil that came from its bones. Okay. That's what you are, the data. We want the data from you, buddy. Anyways, so then people were able to create these GPTs, create different frameworks around it, and then how many resume builders and PDF readers, and when it comes out, and you're like, okay, that's pretty interesting, right? That put a lot of people out of work or made a lot of people more productive. And then all of a sudden, like, oh, by the way, it can make pictures. Excuse me, what? It could make everything, all art, everything that's ever been done. Oh, also music. Diagnose diseases, legal paperwork, marketing materials, SEO copy. Oh, and you can't even tell it. You can't even relationships. You can't even tell. You can't even tell it's not human. In fact, you prefer that's not. So then people are like, there's money that needs to be invested, but it couldn't really be invested in a bunch of places. There's not a lot of things, right? These businesses that were doing, the perplexities of the world aren't everywhere, and a bunch of these are private. So there was, someone sets up a subscription fee. Why do they need to go public? Why do they need any funding for it? Just get it from you. Anyway, so that's why there's hype around the whole AI thing, but it's not really a bubble, because it's not this speculative fervor a la Bitcoin, a la .com, or a la housing crisis, 2008. That's not what's going on. But people want it to be a bubble because they miss Nvidia, they miss Microsoft rise, they miss Apple, they miss all these runs up. And so if it is a bubble and it comes down, then they have a chance to get back in.
And that's where we are right now?
Yeah. And so the idea here is that this DeepSeek comes out. You have this AI competitor from China comes out. Those Chinese come out with the
I've never loved China more. I've never loved.
Get them out of here.
You can tell me. I'm going to sound like Sam Harris now, okay? I could find dead bodies in the basement of China.
I mean, what they're making is unbelievable.
No, it's not that they're making it, Tom. It's that they're making it quasi open source. Tom, I I love O1. I think it's amazing. It's fantastic. I rarely use it because I don't want to rely on something that's so heavily rate limited. I use it, then it's done. Then what am I supposed to do? I got to go back to 4.0, or I have to use a combination. DeepSeek is giving me R1 completely free. Like open, I get to use it, and it searches the web. Tom, it's amazing. I love it. It's so useful.
Do you remember when people were like people like Ahmad Mostake, is that his name? The one who created Stable Diffusion. It's like we have to create an AI for the people because the sovereign entities and the governments will create their own AIs, and then we're screwed. And it was supposed to be America's the bastion of the free. We'll do it. We'll do it.
Open AI.
Exactly. And then who does it? The Chinese. Here.
Now,
$50
are
million
they? They're
to do
doing it to like the conspiracy here is that they're doing it to tank. Like people say, it's no coincidence that it came out just after Stargate.
Fine.
So they're doing it to tank, which I love. Like, isn't
Fine.
that competition? And Tom, just as a side note, what I'm hoping for is that whatever OpenAI, whoever been sitting on, they're like gotta get it out as fast as possible.
That's right.
I think they've accelerated the growth of AI dramatically.
Well, we found out that Google was sitting on AI constantly, but they're like, we didn't think people would want like hallucinations in their stuff. And people are like, fine with the hallucinations. I get hallucinations from people I hire. Fine, give me the hallucination.
That's right. In fact, it makes it better. I don't want some absolute god AI. I need it to be fallible, like a human being.
Yeah. So that's the story. What led up to here. But I don't really care so much about the political or social ramifications of these things, right? This is a market show. And so what I care about is two things. One, it happened. This is happening during a window of weakness. We were talking about before about forced buyers and forced sellers. And there's the selling and buying dynamics that causes these trends within markets. And then because of that, one of the mechanisms that these institutions use, they hedge their positions with insurance types of assets that are insurance called options that pay out in case the stock goes down. If it goes down further than they think, then these options come into play. They get to monetize these options, and then they can suffer the drawdown of the stock while making money on the downside. In fact, you could make more money that's on the downside because the insurance policies that you're paying for, when they pay out in an asymmetrical bet. So, for example, if the stock goes down $1, that option might return them $1.10. But if the stock goes down $2, that stock might return them $3. And if the stock goes down $3, it might return them $10. It can go up in a asymmetrical fashion, the value of it as it goes down. Well, there's insurance companies on the other side of that. The insurance companies are market makers, the ones who are selling you this insurance. Well, they don't make money. They're not trying to make money on the direction of the market. They're not betting if the market is going up or down. They're saying you're betting it's going to go down, so I'm going to sell you that option. And if the market starts going down, I'm going to sell the market too, in order to balance off my position. I got to be what do you call it? Delta neutral, I believe is a term. They have to be neutral to the market because they're just trying to make money on the fees back and forth, right? And so that causes, as the market is going down, it causes the people who own the insurance to be monetizing their puts. They're getting money back from it. And then the people who have to pay out that money have to sell the market in order to balance off their books. So they're adding to the selling pressure. So the people are selling, and it causes the selling to go more, and it causes the selling to go higher, and it exacerbates to the downside or to the upside. So it causes the market to go down, and then boom, you can have this massive crash, like we saw in 2019 with COVID. Right, you have the big crash because as the price is selling down, the dealers are selling. So
we're about to rocket up. In fact, it already looks like markets are going back up.
Well, that's the thing. That's the thing with these markets. This is why we can't actually have another .com and we can't have another global financial crisis, because this option market, this insurance market, is larger than everything.